Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for cash secured puts and covered calls. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform and on the scan tab, and I'm going to be scanning the S&P 500. So let me go ahead and switch to that list and then click scan. And here on the far right, we have a column for implied volatility in descending order. So the highest at the top and then going down from there. And as always, this is after market data, so this may change when the market opens again tomorrow. But let's go ahead and see what the highest volatility stock is in the S&P 500 currently. So at the top of the list, we have Paramount Global, currently trading at $12.59 with an implied volatility of 80%. If we click on these notifications, we can see that it has earnings coming up on February 28th. Let's go ahead and jump over to the trade tab now and look at the kind of premiums that Paramount is paying on cash secured puts and covered calls. I'm going to be looking at the 8 days out options, or the options that expire next Friday. I have this column on my options chain here called percent premium. It's a custom column that I added that quickly calculates the percentage profit for selling a cash secured put at a certain strike price, or it gives you an estimate on your percentage profit for selling a covered call at a specific strike price as well on the call side. If you're interested in adding this column so that you can quickly calculate the percentage profit for cash secured puts and covered calls, feel free to check out the link in the description that has instructions on how you can add this to your own platform for free. Now let's go ahead and jump back into the analysis here. We'll start with cash secured puts. Based on this column, it looks like you can make about 1.38% in just 8 days selling the $12 put options. Your risk here is that if the stock did end up closing below $12 and if you got assigned, you would need $12 times 100 in order to purchase 100 shares. So you would need $1,200 in order to purchase those 100 shares. But the premium you would collect from selling this put option is about $15 per put option that you sell, or 1.38%. On the covered call side, it would cost you $1,259 to buy 100 shares currently, but then you could go ahead and sell the $13 call options as a covered calls and collect about $27 in premium, or about 2.15% in just 8 days. I'm going to go ahead and jump back to the scan tab and we can look at a couple more. Looks like there are a lot of stocks that have earnings coming up very soon. Let's go ahead and take a look at Nvidia, definitely one of the more expensive stocks at $726.58, and current volatility is 65%. It's definitely been on a huge uptrend recently, and looks like it has earnings coming up very soon on February 21st. So let's go ahead and look at the options chain for Nvidia now. And again, looking at the 8 days out options, we're going to start by looking at the cash secured puts. In order to make 1% in 8 days, or about 1% in 8 days on Nvidia, you could sell the $625 strike price put options and collect about $610 for doing that. And your risk here would be 625 times 100. So in this case, $62,500, which is how much you would need if you did end up getting assigned on this position. This is pretty far away from the current price that it's trading at, but with earnings coming up, the volatility can be quite high and you could see a large move in either direction. On the covered call side, it would cost you $72,658 to buy 100 shares right now. But then you could sell the $730 call options and collect about $4,125, or about 5.68% in 8 days. Nvidia is definitely a pretty expensive stock to be trading cash secured puts and covered calls on. Jumping back to the scan tab, let's go ahead and look at one more. Let's look at Dollar Tree, currently trading at $142.15 with an implied volatility of 46%, and it looks like it has earnings coming up at the end of the month on February 28th. Let's jump back to the trade tab and look at the cash secured puts and covered calls for Dollar Tree. Starting with the cash secured puts, it looks like you could get about 1% selling the 140 strike price put options, which means collecting about $147 or 1.07%. And your risk here is you would need 140 times 100, which is $14,000 in case you did end up getting assigned and had to buy the shares of the stock. On the covered call side, it would currently cost you $14,215 in order to buy 100 shares, but then you could sell the 143 call options and collect about $207 in premium, or about 1.47% in 8 days. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of highest implied volatility stocks in the S&P 500. This whole list is again sorted from the highest stocks at the top in terms of implied volatility and then decreasing from there. If you have any questions or comments or want to hear my analysis on any other stocks or option strategies, feel free to leave those down below. And if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.